The Shanghai Stock Exchange buzzed with unprecedented energy in late 2025. The air was thick with anticipation as traders moved with urgency and purpose, their eyes glued to the glowing screens. It was a moment that felt historic, a turning point for China's financial markets. Digital tickers blurred as traders and millions of retail investors across China watched semiconductor stocks skyrocket. The numbers seemed almost unreal, with share prices of chip companies surging to record highs in a matter of hours. For many, it was the culmination of years of hope and ambition. This was more than speculation, it was a patriotic movement, with IPOs of chip companies like More Threads and Meta X turning into national events. People gathered outside exchanges, waving flags and cheering, as if celebrating a major sporting victory. The excitement was contagious, spreading far beyond the trading floor. These firms became overnight symbols of defiance and innovation, their listings celebrated as strategic victories over foreign tech dominance. Executives were hailed as heroes, and their companies' success stories were broadcast across the nation, inspiring a new generation of entrepreneurs. China was no longer content to be the world's factory. It was now racing to master the silicon chips, powering the digital age. Massive investments poured into research, development, and manufacturing, as the country sought to secure its place at the forefront of global technology. The message was clear. True global leadership would be built on semiconductors, and China was all in. Business leaders spoke passionately at conferences, outlining bold visions for the future and rallying support from every corner of society. The roar of the trading floor echoed a nation's determination to control its technological destiny. In that moment, China's bet on silicon was more than an economic gamble. It was a declaration of intent to shape the future. The numbers were staggering. China's semiconductor IPOs and market surges neared 4.5 trillion yuan, or about $630 billion. This was more than investment, it was a war chest, signaling Beijing's resolve to achieve chip self-sufficiency at any cost. Funds targeted every stage: research, design, fabrication, and software, aiming to build an entire industry shielded from foreign pressure. For China, chips are not just economic assets, they're national security. The US's control over the global chip supply chain exposed China's vulnerabilities, making this push a matter of survival. Investors understood, profits could wait. The real return was a secure, independent China, free from technological blackmail. This was patient capital, fueling a generational leap toward global tech leadership. Ironically, it was US sanctions that ignited China's chip revolution. Export controls and blacklists aimed to cripple China's tech sector, but instead, they exposed the nation's dependence and sparked a sense of crisis. Suddenly, self-sufficiency became an urgent necessity, not a distant goal. Chinese tech giants cut off from US chips turned to domestic alternatives, creating a protected market for local designers. Sanctions became the ultimate protectionist policy, giving firms like More Threads and Meta X the space to grow. These companies saw opportunity in adversity, accelerating domestic innovation at a pace no one expected. In trying to slow China down, the US inadvertently created the perfect conditions for its tech rivals to thrive. More Threads and Meta X, both founded in 2020 by ex-NVIDIA and AMD leaders, quickly became the faces of China's ambitious push to build a world-class chip industry. These companies emerged at a time when global chip shortages and geopolitical tensions were making semiconductor self-sufficiency a national priority for China. Their IPOs on Shanghai's star market were met with frenzied demand, drawing in investors eager to be part of China's next tech giants. Despite massive losses and unproven products, the excitement was palpable. With shares soaring on the promise of future breakthroughs, investors weren't buying profits, they were buying the vision of a homegrown NVIDIA, a strategic asset for China's technological future. The hope was that these companies could one day rival the world's leading chip makers and secure China's place in the global tech race. These companies are national projects, fueled by top-tier talent returning from Silicon Valley, and billions in capital from both private and state sources. Their teams blend international experience with local expertise, aiming to leapfrog years of development. The bet is clear. With strong government backing, a captive domestic market, and relentless drive, they'll close the technology gap and eventually dominate China's AI hardware needs, reducing reliance on foreign suppliers. Their rapid rise signals not just a transfer of knowledge but a new confidence and determination within China's tech ecosystem, inspiring a new generation of engineers and entrepreneurs. Backing more threads and MetaX is a bold wager, one that rests on talent, state support, and the growing inevitability of China's ascent as a global tech powerhouse. Yet, the road ahead is daunting. The scale of the challenge facing China's chip industry is immense, and the obstacles are not just technical, they're strategic, economic, and even cultural. Every step forward is met with new barriers, and the stakes could not be higher. US export controls block access to the world's top chip foundries, forcing Chinese firms to rely on domestic manufacturers like SMIC, which lag behind in cutting-edge technology. This means that, for now, China's most advanced chips are still a generation or two behind their global competitors, limiting performance in everything from smartphones to supercomputers. Even the best Chinese designs can't yet match the efficiency or raw power of chips made with advanced Western tools. The gap is not just in manufacturing, but in the underlying know-how and access to the world's most sophisticated equipment. The software challenge is just as steep. NVIDIA's CUDA platform dominates, and more threads must build its own ecosystem from scratch. This means not only developing new tools, but also convincing developers to learn and adopt them, a process that takes time and trust. Their Musa suite and tools like Muzi, Fi aim to bridge the gap, but winning over developers will take years. Building a thriving developer community is essential, and that requires robust documentation, support, and a track record of reliability. Building a robust hardware and software stack is a marathon, not a sprint. It demands patience, persistence, and a willingness to learn from setbacks along the way. The challenge is clear: catch up in both silicon and code, and convince an entire industry to switch. It's a test of innovation, collaboration, and national resolve, with the future of technology leadership hanging in the balance. China's rapid response has stunned Washington. US policymakers expected export controls to stall China's progress, but instead, they supercharged its domestic chip industry. Firms like More Threads and MetaX are now credible contenders, building a parallel ecosystem designed to displace American tech. Chinese chips may not yet rival NVIDIA's best, but they're good enough for many uses, and improving fast. The US strategy bought time, but also guaranteed the rise of a formidable competitor. The question is no longer if China can build a world-class chip industry, but when. The containment policy has become the catalyst for China's own technological revolution.